I also love to spend time.
Well, Senator Lummis, thank you so much for taking the time today. It's really exciting to have you back on Crypto in America. We talked to you, I believe the last time was in August at the SALT conference in Wyoming. And at that time, we were in a much different position in the market structure phase of negotiations than we are now. It's January. We are on the eve of the market structure markup for the banking committee. And I think my listeners in particular really want to know, where are we in those negotiations now? Can you give the listeners a temperature check after the member meeting that you just left? Where are we with Democrats, Republicans?
Well, it's been arduous since we last spoke in August. When in August, I would have told you that we were going to take up this bill and mark it up on before September 30th.
I think you made that prediction on the podcast.
It would be on the president's desk before Christmas.
Right.
I was so wrong. We've been negotiating this bill for 4.5 months. We had 4 markups scheduled. Those dates had to be vacated because members weren't ready. But during that time, negotiations continued. There wasn't a week that went by between early September and now where we haven't had negotiations. So today is the last day for negotiations. Tomorrow is the markup. We have a full list of the amendments that we'll be discussing tomorrow. I expect a long day. But I expect the issues that we will have differences of opinion about to be very few, because we've worked so hard the last 4.5 months to limit the scope of the issues that are still being negotiated.
In your words, it was thousands of hours. And I think the bill, as it stands now, is almost 280 pages and around 137 amendments. What are the key amendments that we should be watching out for in the markup tomorrow?
There's been an ongoing issue that's really unrelated to the market structure bill. It's a hangover from the Genius Act. And that is whether interest can be paid on balances. And the banks are very much opposed to that. They don't want a product that looks like a banking product. In other words, you're calling it interest or yield or a payment on balance to be used by the stablecoin industry. So even though...
Because they see it as competition, right?
I think that's right.
Right.
So we were, that remains a front and center issue in the market structure bill. Now, a couple of alternatives, ideas that have been vetted with both banking and the stablecoin industry are under consideration today. So it comes down to seeing what the members of the banking committee want, which one they choose.
It won't be all 137, correct?
Well, I hope not. Otherwise,
it'll be a long day.
It'll be a long week.
Yeah, that's true. We probably won't get through that in a day.
Yeah.
Yeah. So stablecoin yields. What about DeFi? That's been a very, I'd say, contentious part of negotiations probably in the last couple months, right? The DeFi industry are a big stakeholder in this bill, in this process.
And we spent a lot of time on DeFi in our negotiations over these weeks and months.
Almost derailed the bill, I would say, a couple months ago, right? There was a big blow up between industry, Democrats and Republicans, I think back in maybe September.
I think we're back on track.
Yeah.
But so I don't really anticipate that issue dominating our time. But there are some little tweaks that I think will be discussed. It'll be interesting to see if they have bipartisan support for any of the amendments that are tendered tomorrow, but I really do think they're minor compared to where we started.
Okay. And then on ethics, it's my understanding that because the Senate Banking Committee has such a small jurisdiction over ethics compared to some of the other Senate committees, that ethics inevitably will get brought up tomorrow because I think it is such a priority for some Senate Democrats, but it's not going to be part of this bill text. It will get added later on, perhaps after committee, before it goes to the full Senate. Am I correct in that?
I think that's a fair statement. One of the big issues is under the U.S. Constitution, to what extent can the president and vice president be bound by additional criteria for their service?
Mm.
And earlier case law would indicate that there's very little that additional conditions that can be added by Congress other than those that appear in the U.S. Constitution. This is an issue that we've been involved in more to try to provide language that's acceptable to both Democrats and the White House.
Mm-hmm.
And we're still working through some of those alternatives.
Mm-hmm. Because the president is a big part of this factor, because the Democrats want to see the president have ethics rules applied to him.
Correct.
And the White House is not on board with that because they believe it's unconstitutional.
Well, exactly.
Yeah.
And members of the president's family in particular, and some of his cabinet members,
Mm-hmm.
Their children are very deeply involved in digital assets.
Mm-hmm.
And so Democrats are trying to restrict the family's involvement and at least the president and vice president's involvement. One of the reasons that I try to explain to Democrats that these families got involved with digital assets is they got debanked.
Right.
So if you have a very large business and you're trying to make payroll and your bank tells you we're closing your accounts this weekend, you can't make payroll. And for a bank to do that simply because of they don't like the politics of a customer or the type of business they're in, it sounds so un-American. And so some of these families were searching for alternatives that would allow them to keep and protect and have their own assets and have freedom from institutions that could harm them. And that's one of the reasons that the Trump children embraced the digital assets. You have more personal sovereignty
Right.
over digital assets. And so now to say, oh my gosh, they're self-dealing, you pushed them into it, bankers. And I think that story's frequently forgotten.
I had my share of conversations with industry stakeholders yesterday. I think it was sort of the first time a lot of them had been able to see a nearly final, complete bill text, right?
Mm-hmm.
And I don't think the feedback that at least I got was overwhelmingly positive or overwhelmingly negative. And I feel like most of the time that's an indication of a good piece of legislation, right? Because like that kind of, at least to me, shows that there's been compromise and like usually the sign of maybe a good bill. But I guess maybe one of the things that I was hearing more so than other things was that this bill in particular was maybe more favorable to the banks and TradFi more than maybe Clarity was, the House's bill.
Mm-hmm.
Why do you think that banks are so influential now in digital asset policy, even though they've historically been removed from the industry and its technology and even criticized it, frankly?
Yeah, they have. They've been pretty hostile to it, which is silly because they're going to marry each other after this bill.
Mm-hmm.
You're going to see more hybrids where you have a bank joining forces with a digital asset company. So both can offer both fiat and non-fiat stores of value and means of exchange. So it's interesting to see the resistance, but as things change in technology, and the technology drives different business structures. I don't think anything has been as significant as the financial services industry and the cryptography that has allowed stores of value to occur on a blockchain. I mean, it's so foreign to a lot of people that they're afraid of it. Mm-hmm. And it's they'll get more comfortable with it over time. Yeah. I know they will. So we have to go through this period of time where there's fear of the unknown, but very shortly. I mean, not 5 years, less. You're going to see more hybrids, more marriages of digital asset companies and banks.
And you think the passage of this legislation will speed that up?
I do.
Yeah. Just quickly on the DeFi side, you've been an advocate for a long time of developer protections and self-custody. I saw this week, actually, some TV ads running that were targeting senators to say no to DeFi-specific provisions in this bill. I'm curious, why are DeFi protections for software developers and self-custody so important to get right, and so important to get right in this bill specifically, in your opinion?
Well, first and foremost, code, the writing of code that enables cryptography is protected free speech. So when the internet was founded, the government wanted to control it, our government. And the developers of the code wanted to socialize it and make it more available. And when the courts determined that code is free speech, it broke that logjam. And now we all have access to the internet. You know, initially, the United States government wanted to be the sole proprietor of the internet. And we've seen with the opportunities to use our constitutional rights to free speech and to, freedom in this country as a facilitator for innovation. And that's why I think it's so important. Mm-hmm. That's why I want to custody my own digital assets. Let me tell you what happened to me. You know this story. My husband and I, when he was still alive and we had joint bank accounts, was moving our accounts from one bank to another. During that same week, I was off campaigning elsewhere in Wyoming for re-election to the U.S. House. So he moved our accounts. He signed the accounts, but I was away, and so my signature wasn't on him yet. He died suddenly in the middle of the night of a massive heart attack, and my name was not on any of our accounts. Mm-hmm. During all that moving, he had also moved his will. So I couldn't find it. Oh, so I couldn't get letters testamentary so I could be the executor of his estate. And it was scary and unnerving because I didn't have access to my own money. Mm-hmm. And when someone else is custodying your money, you have an IOU, but you don't have that immediate access to your own money. So that really frightening experience for me also led me to look for ways that I could self-custody that was safer than putting cash under a mattress, but still provided me that kind of access. Mm-hmm. And I found it in Bitcoin. And so I'm a big proponent of self-custody of individual wallets, of the sovereignty that I have to store my wealth the way I choose and not the way the government chooses.
Mhm. Why do you think there is so much pushback to self-custody in particular?
I think the government wants to know how money is being spent. I think they worry that digital assets are used more often for illicit purposes than legitimate purposes. Certainly, there are examples of digital assets being used for illicit purposes, for criminal activity, but it's actually more common for US dollars to be used for illicit purposes. And what people don't realize is there are companies like Chainalysis who have the ability to uncover the illicit use of digital assets. So the ability to mete out criminal activity in the digital asset space is actually pretty sophisticated.
Mhm. All right, I have to ask your best guess going into tomorrow. How many of your Democrat colleagues are going to vote yes?
Mm. I don't know. I
Okay.
keep there are a number that say I want to get to yes. There are some that I think are honest brokers. There's some that I think are not honest brokers. And so as this 4.5 months have gone on, I'm more inclined to think that we'll get some votes from the honest brokers and that the dishonest brokers will vote no because they always thought they would and they just wanted to gum up the works. But I think by and large, most of the people we've been working with have been good negotiating partners.
Mhm.
And because Senator Kirsten Gillibrand and I have enjoyed such a solid working relationship since we started on this together over 4 years ago, and since she has such knowledge in this space that she has shared with her colleagues, I'm hopeful that her influence will show up tomorrow.
Patrick Witt, the White House executive director of the Crypto Council, executive director of the White House Crypto Council, that's the order I meant. He told us on Monday that if no Democrats vote yes tomorrow, that it doesn't necessarily mean that it's back to the drawing board and months more negotiation. It might mean that, but it might also not mean that. Is that your understanding?
I
as
agree
well?
with that.
Yeah.
And I want to compliment Patrick Witt. He has been, talk about honest brokers. He has been extremely helpful. He's been very responsive. He has gotten back to us about what the White House can and cannot agree to, where the negotiating space is. He gets high marks from me.
Well, final question. This is your last year in Congress. You announced your retirement a couple months ago. So if this bill passes, this will be your legacy in Congress. When you leave, any plans to stay involved in digital assets, maybe out in Wyoming?
Yeah, I don't know.
Okay.
I put early on when I came here and realized that there was not much knowledge or interest in digital assets. My staff encouraged me wisely to put my individually held stocks and my Bitcoin into a blind trust that was approved by the Senate Ethics Committee. So I did that. And I don't know, since I did that, whether I still own those assets. I hope I do. And so when my blind trust expires, I think I'll keep those assets, most of them. But I'm more concerned about the opportunity to manage my own money. And I'll always have an interest in this space. It's fascinating. The people in this space are fascinating.
Never a dull day, right?
Never a dull day. But I also love to spend time with my cows and my ranch and my grandchildren. I do know this, I'll never quit working. The great joy of my life, getting up every day, is the opportunity to work in America. That'll never change.
Love that. Senator Lemus, thank you so much.
Thank you, Eleanor.
In the publicly traded aspect and how it supports the Can't network, which is a very unique network. But let's start really from the beginning. I would love to know about your background. You have a super unique experience. I see that you're at firms like DRW, you're at Citadel as a treasury and operational roles. We'd love to know about your background and then how that got you into kind of a crypto-based role here.
Sure. Yeah. So I started my career kind of in operations and morphed into the treasury role. So kind of, if you will, in the financial plumbing aspect of finance. Started at Citadel, was there for about 16 years, treasury operations roles. And Citadel, when I first joined, was not nearly as large as it is today, and kind of crossover from the hedge fund and market making side. But my roles kind of traversed across both of those. And what that taught me was really about building things for scale. And, you were always tested with trying to create additional capacity. So that was the mindset about creating redundancy, resilient systems and processes around it. And obviously, Citadel's been around and done very well over the course of time, had some turbulent times, and it's a testament to the structures that were built to really persevere through them. So very, challenging consensus type mindset about trying to always evolve, which also translates very well into the digital spaces. Every day is something different. And that was something that was at Citadel and also, frankly, at DRW. So when I moved over to DRW in 2019, treasurer operations, and then took on a role of COO there. Again, it was about creating scale, different firm in the fact that DRW is frankly more diverse in that it has real estate, it has Cumberland, one of the largest market makers in crypto, to venture capital, and then both the blend of market making, liquidity providing, and also risk taking and trading activity, but also carries the same characteristics about how do you build things scalable and efficiently, and really trying to challenge consensus and do things differently than the status quo that's been done for a number of years. And so that was the kind of same narrative from both of those firms that really positioned me well to think about how to take these emergence of TradFi, DeFi worlds that are colliding in real time, and how do you build upon that, and how do you come up with something new to scale upon it. And so that's where I think it really why I was lucky enough to be selected for this role, is to take my history and background of my traditional finance roles about scalable processes, et cetera, and apply it to Canton, which is one of its sole focuses to kind of, it's at the epicenter of this convergence of TradFi and DeFi.
I mean, we have certainly seen this like collision course happening between TradFi and DeFi and crypto happening in real time this year with all the treasury DATs and the institutional adoption and the ETFs. It's certainly an exciting time to be in this world. For the audience, just explain on a high level, what's Theramun? What's the goal here? What are you doing?
Yeah, so Theramun, as you said, it's the first publicly traded company with a digital asset treasury focused on the Canton ecosystem, the Canton coin. How do we evolve and continue to grow on the network? And so, like many other digital asset treasury, there's been a lot of them. There's the function and feature of the capital markets flywheel, where you are acquiring the coin and issuing shares, raising capital through the capital markets to do so. But that's one of the features of this DAT. We also are focused on generating value through becoming a super validator, which is in process now, which will allow us to generate Canton coin organically through participating in, if you will, the governance structure of being a super validator. And I'm happy to talk more about exactly what that means. But that's a unique feature where we're able to organically generate Canton coin versus having to go out and raise funds through capital markets. It can be, investing in other companies that are building on top of the Canton network. It can be buying apps. It can be seeding different companies that are all about building on top of the network. So we're an evangelist promoting and trying to make awareness for Canton. We think it's very special and poised to change finance as we know it. And so I think the differentiating factor of this app versus others is the fact that we have a diversified revenue stream versus just the capital markets flywheel to generate revenue.
Yeah, and it seems like this strategy is a little bit different than the wave of companies that we've seen that have just their thesis or their goal is they buy digital assets and they keep it on their balance sheets, or they sell more stock and they buy more digital assets and keep it on their balance sheets. You're doing something that sounds like completely different, correct?
Yeah, we still have that. That's a feature of it, but it's not the only feature. And so it's, again, how do we grow and add value to the ecosystem while also generating additional yield and cash flow for our investors, our shareholders?
All right, that makes a lot of sense. It's a little bit unique, more unique spin on this treasury asset theme that we've seen pick up a lot this year. Let's dive into the Canton network. I'm a little familiar, but at a high level, what is the Canton network? What problem are they building, or what problem are they solving, I should say?
Sure. So, and it's been a long process to get to where it is today, but it is a public blockchain with configurable privacy. And that's the element that I think the one thing to take away on what differentiates Canton from every other public chain that's out there is the configurable privacy. But it has, interoperability. It has, it dwarfs all the other L1s as far as real world assets that are already on top of it today. It has $9 trillion worth of real world assets that are trading on it on a monthly basis. And so it's processing around 700,000 trades per day. So it's not about, testing and kind of hypothetical activity going on top of it. It's actually already happening. But at its core, it's an L1 public blockchain that has this configurable privacy element, which is, I'm sure we'll get into in a little bit. It's the really differentiating factor from all the other chains that are out there.
Yeah, privacy's kind of really picked up over the past couple of months. It's been a buzzword in the crypto industry for good reason,
For sure.
and we'll dive a little bit into that. But I also see Canton kind of touts itself as being institutional grade. What's that mean, and how's that differentiate itself from some of these other L1s that might be claiming something similar?
So again, I think you point back to the privacy element. So you think about institutional workflows and requirements. It's not privacy is not like a nice to have. It's a must have for getting institutional adoption to it. So you think about a bank account, and this doesn't just frankly apply to institutions. I think most individuals or retail would want the same thing. You don't want your bank account information to be publicly available so that you can see when you pay for something, how much you paid for it, et cetera. There's an element of you don't want that to be known to the masses. For institutions, that's their IP. That's what their trading strategies is. And if it's completely out in the public domain, they don't have a business around that. Also, when you're dealing with institutions that are highly regulated, there are different customer protection and rules that they have to abide by. And so you think about, let's just take, I mentioned a bank account. The way that Canton can structure is the way that JP Morgan, that's your banking provider, they need to see everything that goes on to make sure there's no AML issues. You're not doing anything paying wrong with it. But it doesn't mean that anyone else in the public domain can see your bank account and go through it. And that's the configurable privacy element that really allows institutions to get comfortable with it. And it's customizable, meaning every application or every use case that goes on top of Canton, it has the ability to configure it based on that use case. So one application may say, these 10 fields are public and these 5 are private and are only to these institutions or regulators, et cetera. And another use case may say the opposite. These 5 fields are public and these 10 are So it's the beauty of having customization around what that is based on the use case that's coming on chain. And that's what I think really differentiates to get institutionals comfortable. There's obviously, I think, other things that make it attractive from an institutional adoption. It hasn't, it's been built over 8 years worth of it. So it's intentionally gone through the process and frankly learned from other mistakes of other blockchains and other things that have gone and tailored it to learn off of those, so we don't trip over ourselves the same way that others potentially have. And so I think that's also a key component, that this is not something that's been rushed to market. You think about it, really only became public less than 2 years ago. The coin was just started in circulation within the last year and a half. I was just listed about a month or so ago on exchanges. And so it's been a very slow, deliberate process. And that's really to make sure that it's stable and reliable in order to get that institutional adoption that we talk about.
I love it. We didn't just rush a coin out in front of everybody and tell them to buy and throw some tagline and buzzwords out there, huh?
Yeah. It's not a momentum trade. This is definitely a marathon and not a sprint. It's really about using the power of blockchain technology and then converting that over to or building on our traditional markets on top of those rails. That's the true unlock. And it's really about economic utility that it unlocks versus like a, mem coin or anything like that. It actually has real economic value associated to the users.
Yeah, and I guess like the cyberpunk person in me, or like the OG crypto user, I'm like, I want transparency. I want to see exactly what's going on at all times. But then there's like the other side of me, and the one that's more realistic and that I probably identify with more, who gets it. I want institutional adoption. I want retail users, and the transparency is great. That's what we love about blockchain. But then there's this other side of privacy that, yeah, we don't want to share all that information. That's just coming from like a retail guy like myself. And then when we get into the institutional grade side of things, it's like, okay, yeah, I get it. We probably want to keep a handful of these things out of the public eye for all these different reasons. It's, for instance, I come from like a medical background. It's like some things need to be private at the end of the day. Patient surgeries, patient names attached to it. It makes sense. And for institutions to adopt crypto the way we really want it, privacy is so important. And what really stuck out to me, what you were saying there, was how highly customizable it is. It's not just like everything's private or everything's transparent. It's where you can kind of pick and choose. And it sounds like you can choose who or what institution or what end user can see certain aspects. They can, they can't. And I love that. I think that's a huge feature to this chain.
Right. Yeah, I totally agree. And I like a couple of different examples that I'll talk through. So think about in our traditional markets, in the equities market, there's a tape, it's reported, there's timelines around it. The bids and offers that are out there, it's not necessarily, it's the person that's providing the bid offer can display their name, but majority of the time it's anonymous. But there's trade reporting, and there's a timeline around when that aspect of it is released to the public. In treasury trades, there's a delay in certain sides of it. And that is also where you get transparency on this, because you get real time about the trade happened, this transaction happened, but it just doesn't disclose the name of who that is. So and that's again, the choice. Someone can say, I want it publicly available, real time. But there's a use case, to the OG crypto side. I would say stablecoins are well adopted and believed by most, I think, of the OGs. But if you look at what is available publicly, even on stablecoins, it's not always real-time transparent on what those holdings are, et cetera. And there's a reason why they want some privacy for that, for their institution, even though they are a crypto institution. And so that's where I think it's there's a fine line between that. And then I'll talk about a little bit more about, we talk about privacy. There's, part of the reason I think the crypto community is skeptical of privacy is like compliance and aspect around that, and important there. And I think the way that Canton's focused on that is creating a governance structure that gives us that compliance. So there's a foundation that's independent from digital asset, independent from Canton, that gives it that, governance structure. And it has, I think it's 16 board members of institutions. It's a mix of TradFi and crypto players that are in that governance structure, which are who determine some of these things. And so DTC, which I'm sure we'll get to the announcement over last week they're going to be co-chair of this foundation. Euroclear, which is another large CSD, is another co-chair. There's just this governance structure around it that was intentionally done to give some more credibility associated with that compliance element of it.
Yeah, that's a great clarification, because there is a difference between privacy and compliance, and not everybody really fully understands that. So that was really well put. And you kind of took the next question out of my mouth there. I'm curious about the DTCC announcement, and why was Canton the right choice for them, and what's that partnership signal to the broader market?
Sure. Before we get into that, I just want to talk a little bit about the backdrop over even before the DTC announcement. Over the last week, we've had some pretty big announcements that I don't think it's been well digested in the market about how transformational they are. So going back over last year, you obviously had the Genius Act that was well described about how monumental that was to give a framework in the US for some adoption in crypto. But around, I think it was probably maybe 2 weeks ago, within the last 2 weeks, you had the CFTC, which is the derivatives regulator in the US, allow for a pilot of using digital assets for collateral to derivative transactions. That in and of itself was huge. And I'll describe it in a couple of different ways. The derivatives markets is trillions of dollars. Call it, I'm going to round and say it's around $25 trillion worth of derivative transactions in the world. And then you have around, call it 2 trillion of collateral that's backing those positions. And so allowing digital assets to be used as collateral to back those trades is huge, because it allows for the mobility of collateral to go to digital rails. Like, that's the transformational piece of being able to move things, instantaneous settlement, that, ability to do that, that's huge. And then the next one, which we talked about or mentioned, was the DTC announcement of allowing them to tokenize assets. And obviously, let's just put in size of what DTC is. They're I think globally the largest CSD out there, with $100 trillion worth of assets. And so allowing that to be tokenized is huge, because that allows those assets to be more freely moved, which again is the converting over to digital rails, which just unlocks so much more potential of different use cases that aren't possible with a T plus, the equity market several years ago was T+3, now we're T+2, now we're talking about instantaneous. Like, that is a huge difference between those two. And so it's going to unlock true economic funding cost, or relief that funding cost. It adds value, which in turn should reduce friction, slippage, cost. It should pass all the way back through to the end people that are building on top of it, and the investors will benefit as a result of it. So that's the aspect that I think is really not well understood about how big in size these markets are. And I know they're pilots and they're testing the waters associated with it, but those are huge unlocks of potential in blockchain adoption. And so then the latest obviously release was DTC announcing that they were going to pilot some of this activity on top of Canton for treasury activity. Just sizing that up. I said 100 trillion under DTC, around 30 trillion of that is US treasuries, which is the size of our US debt, which unfortunately it doesn't seem to be going down anytime soon. So it's a huge potential to do real activity on top of Canton, and having this behemoth like DTC as a part of it is just a testament to what Canton's building and what they're excited about in the future.
Yeah, I mean, that's certainly a feather in their cap. I mean, I did not realize DTC had $100 trillion of assets. I mean, it's almost such a big number. We throw it around, but that's trillion with a T. It's it's
Yes.
just outrageous when you think about that. So that's certainly a feather in the cap. Do you think most financial assets will eventually be issued natively on chain rather than mirrored or wrapped?
Yes, I do think it's going to be a sequencing of events, and I think you're seeing this, play out. Just to use another example to kind of talk through, you have lots of buzzwords about 24/7 trading, and obviously crypto has been doing that for years. I think the latest was 23/5 trading in U.S. equity markets via Nasdaq. But you can't just get right to that point. There's sequence of events that have to happen. And so mobility of collateral and instantaneously being able to do those settlements and collapse exposures is like a requirement. And, again, I think traditional markets in finance learn from crypto and the fact that they've done that for years. And so that's an example where they're learning from that side of it. And again, I think that mobility of collateral is needed in order to do that. So that's the first step. And that you're seeing with the CFTC allowing digital assets to be used as collateral is another example of that. Tokenizing by DTC is another. And then the next step after we get through that is then you're going to see more native issuance on issuers and on top of blockchain. You're seeing some of that early stages, like one Canton a month or so ago was the first U.S. bond that was issued natively on top of Canton. And so that's an example of it. And I think you're just going to continue to see that. But I think it's a sequencing of events that need to happen before you get that native issuance. And so you're seeing it, crawling, walking, and then eventually running. And I think that's the way it's going to play out over the next couple of years.
With that all being said, where do you think we are in the crypto adoption cycle for this institutional standpoint?
First inning. So that's what's so exciting, because
I like that.
It's if you're a baseball fan, there you go. But it's really early on as far as where we're at, because again, you think about, we've just talked about DTC, 100 trillion, massive size. We're just piloting. We're just dipping our toe and testing that around building on top of that. Now it may move quick. We may get from first inning to the ninth inning fairly quickly, but it's early on as far as what the potential is. And I think that's the way I would describe it, is it's very early on the scale of where we think this can go. And so that's why it's very exciting. And why did we do Theramune, the pipe deal, in relatively a weaker timeline, right? There was much of stronger times in 2025 than when we launched this in November. And it was because this is the time to bring this to market, because this is going to accelerate as far as adoption and scale on top of it. And so that's why we went forward in bringing this to market, to allow investors to get access to it via publicly traded equity and to participate in the growth and the excitement of what we think is happening real time, which is transitioning these traditional T plus whatever markets into real-time settlement, real-time mobility of collateral, so real use cases, and see that transition happen real time.
Yeah, I have a similar timeline as well. I think like the first inning is a really good analogy there. It's so funny you use the baseball terms, because some reason we all love to use baseball terms to
It's America's pastime, I guess. But
yeah, to break down a timeline. It just seems to resonate with us so well. And this is maybe like 8-10 months ago. Me and my co-host Joe couldn't make it today. We were kind of talking about institutions and getting on board and just what we were talking about. I was like, dude, and he's like, how far along do you think this is? And we knew it was early. I was like, Joe, we're still drinking beers in the parking lot right now. The game hasn't even started. And there's obviously been some momentum since then, but I'm extremely bullish in the direction we're going. What's some of the biggest blockers keeping from institutions from going fully on chain?
So I think there's an element, and this again is changing, but there's an element of fear still. from institutions on, kind of some of the crypto aspects of, the lessons that cryptos learn themselves. And so I think there's an element of fear. I think there's also constant commingling of, crypto and some of the, meme coins and things like that versus the technology behind it. Like that's the true power behind it, is the technology and what that unlocks. And so I think that's the common misnomer, that people always kind of commingle those two and don't truly appreciate what it is. And so they have to actually, dig deep and actually understand it versus just the narrative of, oh, it's crypto, it's a meme coin. And those are completely two different things. And so I think that's kind of one thing that needs to play out. There's just like headwinds, there's also tailwinds. We obviously in our more favored regulatory environment, we're seeing that over the things that we just talked about over the last couple of weeks that lay down the groundwork for it to really grow and scale. And that's where I think you will continue to see it pick up steam, hopefully quicker than anticipate. But I also think it's important to do it deliberately versus rush. This is not, a sprint to the finish line. And, it's about getting this in scale. So I mentioned in the background of Citadel and DRW about, it was always about creating scale redundancy. So how do you build these resilient systems and platforms that you can grow and scale on? And I think if that's the same approach for institutional adoptions, is you need to build it and test it through before you just kind of rush to the finish line and get things on top. And that's the approach that Canton's taken. And I think that's where you'll get more, trust from institutional players to build on top of it.
Yeah, and you're right. Crypto's weird at the end of the day. I mean, the technology is unbelievable, blockchain technology, but then there's all these like small subdivisions within crypto that you could gravitate to. I mean, I'm wearing a rect hat, for goodness sakes. I have dabbled in meme coins. I certainly NFTs and prediction markets, and the list goes on and on of how the underlying or the technology has all these underlying different sectors within it. But when we really want to talk about just like where it's going to really be so disruptive is in these institutions, cross-border payments, just tokenizing of stocks. I mean, it's just real world assets. The list goes on. And I could imagine that, there's some just education at the end of the day that a lot of these larger institutions need to fully understand and embrace. And when they fully understand and embrace it, I think we're going to be off to the races. And that's what makes me personally so excited. What are some of the biggest misconceptions retail investors have about institutional blockchain adoption?
So I think, we already touched on some of that. I think the element of privacy compliance is one that's not well understood associated with that. I think, there is, you think about institutional capital, it's usually a little bit more sticky type capital, and not as quick to move. And that's good and bad. There's both sides there. But I think that's one that's not necessarily well understood. And then I think the flip side is you look at what the retail and the crypto community has built. I think that's also a misconception the institutional community's got wrong, and the fact that they haven't, fully embraced of the difference of the technology versus the crypto element of it, and truly appreciating that. I mean, 24/7 trading, crypto has been doing it and successfully associated with it. So that's an element where I think the institutional side needs to embrace it and get comfortable with what's already been done and proven to work. And it just needs to be done thoughtfully as you expand it into more regulated markets that have, a broader, economic impact for our economy as a whole. And so I think it's one, the beauty of it is there's both sides of those community, and that's what makes a market, is retail and institutional working together to kind of build that structure. And I think there's lessons that both sides can learn from each other that will build us a more, resilient, structure, market structure.
Are there any signals or milestones we need to keep our eyes out for to indicate that institutions are truly all in? I'd imagine there's going to be some pretty obvious ones.
Yeah, I mean, the measure, and again, there's plenty of different sites that track like the real world assets that are being done. I mean, right now, Canton dwarfs all the others. Canton's one of many blockchains. I'm sure there will be others that will get privacy sorted out, but right now, that's the one that has the public chain and the configurable privacy element associated with that. And I think as you track real world assets and see that continue to grow, that's one lever. You'll see real activity on top of it, and that will, obviously it won't just be Canton. I think competition is a good thing, and we'll see how the things evolve, but we're very excited about where Canton is positioned today. And I think you'll see, again, things transform from, pilot to really live and scale. So I think as you see more regulatory, whether it's the SEC, CFTC announcements of various different things, that's where you're going to see more institutions be able to dial in. I think, why Theramune as an equity as well is important to think about, because there are certain institutions that still can't hold cryptocurrencies. And that's an element as well that I think will continue to evolve, where you're going to have that more of an acceptable investment across the ecosystem. So, those are where that I would continue to look at what's the size and scale of real world assets and transactions that are going on top of these chains. Look for different regulatory tweaks from going from pilot to actual live, and then continue to see who's announcing that they're participating. So we've had some pretty big ones in our ecosystem over the last month or so, and we're really excited to see how it continues to evolve in 2026.
I mean, you guys have, there's tons of headlines that we could go through. I mean, Theramune raised $540 million in private placement. Some amazing things have been happening for your company.
Yeah, I mean, I think it was intentional. Like, this is 8 years in the making of getting to this point. And so, like any network, it's only as good as those that participate in it. And so you intentionally try to go after the right mix of players. So from a traditional finance, you have, obviously, we talked about DTC, a CSD, the largest one out there. You have NASDAQ, US Equity Exchange. You have large banks. You got JP Morgan, you got HSBC, SocGen, BNP, Bank of America. You have large, banks on that side of it. You have Broadridge, you have Tradeweb, you have large institutional players, and then you have on the crypto sides, you have Circle, you have Copper, Custodian, Market Makers, Cumberland, Fireblocks. You just go through, and it was kind of intentionally trying to go out to the right disbursement of players to bring them into the ecosystem to strengthen the network. Because again, the network is only as good as those that are in it, and that's what we intentionally try to do over the last 8 years.
Yeah, very well said, and really a methodical approach. And you're building for the long run. And I do personally believe that 2026 is going to be a huge year for crypto adoption and more institutional interest. And I want to give you an opportunity now to kind of give a shout out for Theramune, for the network. I know your stock symbol is THAR, but I want to give you some time to just kind of give a shout out. So anybody listening in the audience wants to learn more about the network, learn
Welcome to the Global Blockchain Business Council's Markets on Chain, a new series that provides firsthand insights and opinions from leaders and innovators influencing the digital transformation of capital markets. OKX has established itself as one of the world's leading cryptocurrency exchange platforms, offering a comprehensive suite of trading, staking, and decentralized finance tools for digital asset enthusiasts. The platform is known for its advanced trading infrastructure, deep liquidity, and integration with Web3 services, making it a top choice for both beginners as well as professional traders. And with me is Roshan Roberts, CEO of OKX US. Great to have you here. So let's start with that. How is the expansion going in the US?
It is going brilliantly well. Firstly, thank you, Jane, for having me here on your show. We launched the US market in April of this year. And since then, we've been expanding our products and services, servicing both retail and institutional customers. Over the last 4 to 6 months, we have brought in a unified stablecoin order book. We've got new payment methods, including Google Pay, Apple Pay, and we've slowly started to expand our operations across the US.
Now, what can customers do on the OKX exchange?
Right now, what we have is a spot exchange where we have an ever-expanding list of crypto tokens that can be traded on the platform. Over time, of course, as we build the US franchise, I believe we'll have 4 or 5 opportunity sets that we can look at. The spot market is going to expand, as I said, and once we establish ourselves, I think we'll turn our sights to the derivatives market. Right. There's also this expanding space of RWAs or real world assets that are coming on chain. And since we are a marketplace, we'd like to see how we can be a marketplace for real world assets as well. And last but not the least, there is a great opportunity in the payment space and in this intersection between stable coins and payments. So that's an area of focus for us as well.
Yeah, the real world assets, a very interesting part of the whole blockchain system. And of course, OKX known for a centralized exchange, but is expanding into decentralization as well. So, and this lets users trade tokens with other users. So how does that work exactly?
Yes. So just yesterday, actually, we launched a new product called CDFi. And CDFi essentially is a product that allows our centralized exchange users to get a window to view the decentralized finance world, right? And in a sense, if you look at the DeFi marketplace, we do have 2 parts of our business. One is, of course, our centralized exchange. And the other part of our business is about creating infrastructure that can help people transact in the Web3 world, in the decentralized finance world. And over the last year or so, what we've been seeing is there's increased adoption of the DeFi space. Just if you look just at the OKX infrastructure, we've seen just in 2025 nearly 80 billion in volume flowing through our DeFi infrastructure.
Interesting,
right? And we've seen nearly 4 million daily active wallets in the space. These numbers are numbers that talk about real adoption in this space.
Mm-hmm.
So as technologists and as premier innovators in the space, I think we also have a responsibility. And one of that responsibility is to make sure that that we include the larger public who want to transact in DeFi, right? And the CDFi product is all about abstracting away the complexities of technology and providing an easy but compliant way in which these users can actually view the DeFi platforms and the DeFi tokens and really trade them.
And what about transparency, security? That's so important. How do you make sure that you are ahead of all of the issues with security out there?
Well, we're talking about transporting value through the internet. So security is of prime importance, right? We cannot compromise on security as well. And I'm proud that we have probably one of the best cybersecurity teams in the industry supporting OKX operations. It is actually one of the core pillars, and I'll talk a little bit more about those core pillars. But the other side of the coin is transparency. Transparency is a key ingredient of trust.
Yeah.
So we are very particular that we are transparent about our fees, we are transparent about the disclosures we have on board, and to ensure that we have the right governance around this technology infrastructure that we've built. We've placed that technology infrastructure on the 5 pillars of finance, so to say. So we've built out a very robust compliance program. We have nearly 500 people manning compliance operations around the world. We've built out a strong risk management program that looks at all applicable risks of the ecosystem as well. And that's a team that has been growing in strength day by day. The third pillar is, of course, cybersecurity. And I believe that this is an area that one needs to be really, really involved in at the senior level as well. So I take special interest in making sure that the governance that we have around cybersecurity is fit and proper. The fourth pillar is it's interesting because, if you look back at the 2008 financial crisis, it was all about protecting client money, right? So my fourth pillar is all about making sure that all client money controls that we have is governed in a proper fashion. And last but not the least is, having a supervisory mechanism around sales practices, which comes back to your point about transparency, right? So transparency is one thing, but then having that governance in place to make sure that that transparency manifests itself is definitely important.
Now, what are your thoughts just on Bitcoin and crypto in general? It just feels like it's been a pivotal year. We've had Crypto Week, mass adoption by some huge funds, BlackRock and others. What are your thoughts on where we are with this, and what kind of legislation or what needs to happen for mass adoption?
Crypto Week was probably, which was in July, was probably one of the most consequential weeks that we've had in this tumultuous history of Bitcoin and crypto over the last 10, 15 years, right? But why I say that is because it is a point in time when both regulators as well as the general public have realized that this is where the new world of finance is going, right? So the Genius Act, which is focused on stable coins, it is going to sort of really increase the market cap of stable coins, which is right now around 300 billion to north of around $2 trillion in the next few years, right? So you can imagine, that legislation actually supercharges the growth of this ecosystem. And of course, part of that growth is going to sort of really translate into internet capital markets or the capital markets that have developed around crypto as well, right? And that'll also sort of supercharge the way institutions look at crypto. The other point is around institutions, right? So institutions have, over the last few years, tentatively gotten into crypto. It started with, creating this little bridgehead around, getting exposure through ETPs. You had the Bitcoin ETP, the ETH ETP, and then large financial institutions partnered with robust, crypto firms and exchanges. Like we have a partnership with Standard Chartered, where Standard Chartered has a custodial unit through which our clients actually trade on the OKX exchange, depositing collateral within Standard Chartered custody. So these kind of off-exchange settlement that has come through with partnerships, with key partnerships getting created between traditional finance firms and crypto firms, have also supercharged this institutional adoption that we are seeing.
I'm going to talk to you a little bit more about that because I know you came from the financial industry. But before we move on to that, how do you see the U.S. now in terms of blockchain, crypto leadership worldwide? Do you think the U.S. is at the top, or, where would you put the United States?
I think over the last few years, we were floundering a bit, but the last 1 year or so has given me hope that the US will be at the epicenter of this evolution as we see it, right? And it is also important because as the world is moving into this new financial system, right, be it on the DeFi side or on the centralized exchange side, the US needs to take a leadership role here. And I think what the Genius Act also does is, in a sense, it extends the reach of the US dollar, you know, in a very volatile geopolitical environment that we live in today.
Yeah.
I think using stable coins to extend the reach of the US dollar is also very, very important for the United States.
Interesting. And I've seen like Europe has been looking at the Genius Act as kind of a model to emulate. So now I mentioned, so you came from the financial services industry. How do you see blockchain financial services kind of melding together, working together? What will this look like for, say, the end user at some point in the future?
Well, I think a lot of products are going to sort of really get transported through public blockchains, right? That is the future. The future is where, and we are just at the start of that evolution, right? Today, we have probably around $30 to $40 billion of real world assets going through public blockchains, but that number is going to go up, right? And when that number goes up, I think a lot of traditional finance institutions are going to partner with the robust, crypto exchanges, crypto centric organizations, and that partnership will yield a lot of good results. And that's what I think. DeFi is also an important part of this journey, right? Decentralized finance. We have a lot of products being launched on DeFi today, and the DeFi market cap is also sort of really showing growth. I mean, the annual growth rate of the DeFi ecosystem is around 40 to 50%, and that is also something to keep an eye on.
And finally, you're a member of the Global Blockchain Business Council, which is bringing these interviews to the public. What are the benefits and opportunities of being a member of the council?
The GBBC and organizations like GBBC are so critically important as we continue to sort of build public blockchain finance around the world. GBBC, for example, has nearly 500 members, and it forces us to come together as a group, discuss topics of interest, discuss topics that are otherwise very uncomfortable to discuss, right? And importantly, it also sort of helps us helps convey our message to regulators and to governments around the world. So critically important to have organizations like the GBBC to sustain and manage the growth of this industry as we go into the next decade of its evolution.
Roshan, thank you so much. Wonderful to hear about OKX Exchange.
Thank you, James. Thanks for having me again.